I think from a Chinese perspective, they would see vulnerability, right? They would see that a president that talks tough, but in the end, when when the tires hit the road, or when faced by the reality of his decisions, in the end he balks and he steps back.
I'm joined today by Tim Ash, a senior sovereign strategist for emerging markets at RBC BlueBay Asset Management. Thank you for joining me today.
My pleasure.
Trump's Deputy Chief of Staff for Policy and Homeland Security advisor Stephen Miller said Trump has done more to reform broken international trade in days than anyone else has achieved in decades. Has he?
Well, it's pretty seismic what he's done, right? I mean, I guess, we're used to 30 years of globalization. What has that delivered? It's delivered higher global growth, economies of scale, comparative advantage, lots of cheap goods. So populations benefited from that. I guess, with hindsight, question marks about inclusive growth. I guess some have done very well. I guess the rich have done better from globalization. Plenty of billionaires created from that globalization process. It's fair to say that the deindustrialization of many developed market economies, UK, obviously the US, has caused lots of social problems, and ultimately, I guess, it's ended up in a very fractured political landscape. Rise of populist parties, MAGA is part of that process, right? So Trump has, is trying to reverse that process, right? And that's part of the MAGA kind of story. But it's also, I guess, about pushing back on China. There's this battle for hegemony, global hegemony, I guess, between China and the US. The US is thinking about its national security interest. It thinks that the destruction of the US manufacturing capability impacts on its military-industrial complex. If you assume there's going to be a military conflict between China and the Americans, then the Americans think that they need to reindustrialize so they can make military kit again for this potential, I guess, battle with China going forward, right? I guess that's one way to describe it. So anyway, we have Trump's first term obviously started this process, and now we have a pretty seismic move early in the Trump administration. Obviously, we had Liberation Day and very significant sanctions on many, many countries, and this weird formula that was rolled out. And now obviously markets didn't like that very much. Bond markets came very close to completely crashing. And we see Trump kind of pull back a little bit, obviously reduce tariffs. We'll go back to a 10% generalized tariff and talk about a 90-day reprieve and a negotiation process maybe for allies to negotiate their tariffs down. But actually, this 125% tariff on China, I guess, just affirms that the primary target of trade wars from a US perspective is really China.
Well, touched on China a little bit, but you mentioned then bond market changes. Before Trump announced his pause yesterday, bond yields started going up rather than down, as I'm sure you're aware. Could you explain a little bit about what that means, the significance of it, and why that is the likely cause of Trump's U-turn, as some people are calling it?
Well, obviously, US bond markets are enormous, and it's US treasuries are deemed as kind of risk-free assets for international investors. And, the really huge moves we saw in yields, which we never normally see, raised alarm bells that this risk-free asset that, normally in times of stress, people buy those assets, right? They went the other way, which was very, very unusual. There was concern there that maybe China was selling some of its stock of treasuries in retaliation. I guess it also reflected a concern really about stagflation, right? Trade wars disrupt economic activity. That's a general, well, two things actually. One is, if you see reversal of globalization, it should mean lower growth and higher inflation because you're not basing economic decisions on comparative advantage, and I guess economies of scale related to that. So, you see a reversal of that cheap manufacturing of consumer goods by China is going to reverse, right? So it means more inflation. And the other angle is concern about, I guess, disruption of supply chains, right? I mean, just a huge hit in terms of the tariff impact on China. I mean, and think about international business. I guess, we saw that with Land Rover or Range Rover UK this last week, right? I mean, many businesses just don't know what the tariff is or will be, and so a lot of businesses kind of decided to wait. So maybe they've delayed decisions about selling across borders, and that creates concern about like a COVID style disruption of supply chains. What does that mean? Lower growth, but also higher inflation, and in the end, bond yields rise because of expectations of higher inflation. So it's a combination of a few things, but it's pretty disturbing because the anchor of international markets is this sort of risk-free US Treasury market, and if it's behaving in a wild and unstable ways, it kind of creates a lot of broader uncertainty about markets, right? In any event, we had those huge equity market reductions, which were a bit more understandable, right? Because they were reflective of an assumption that trade wars likely increases the chances of a US recession, increases the chances of a global slowdown, and lower global growth generally is bad for equities.
So now to shift onto China, it would seem as if Trump has blinked first. He's shown a stark difference between American and Chinese economic resilience, with obviously Xi not being subject to the same economic political pressures that Trump is. How do you think Trump's pause on global higher tariff rates will have impacted his bargaining capacity with China?
Well, it's interesting you say that. I mean, Scott Bessent, the US Treasury Secretary, argues that this was all part of the plan, right? That, imposing wide-ranging tariffs against almost everyone, including our allies, in the end disciplines our allies and forces them to get in behind the Americans in the ultimate battle with China. This message from Trump, his own words, that they were phoning in to kiss his arse in terms of to negotiate deals. I mean, that's the best kind of line. It's up to you whether you believe that. I mean, my own opinion is that rather it was the extreme moves on global markets, and particularly US markets, that at the end forced Trump to blink. And I think there was a lot of pressure on Trump from free traders within the Republican Party, his billionaire bros, obviously Elon Musk's key there. Obviously, we had the battle between Elon Musk and Navarro, his trade advisor, very public spat between those two. But I think many US middle class citizens will have seen their investment and retirement portfolios get cremated, really, in terms of the moves in terms of markets. So I think there was a combination of a few things there. I do think he blinked first. I think from a Chinese perspective, they would see vulnerability, right? They would see that a president that talks tough, but in the end, when the tires hit the road, or when faced by the reality of his decisions, in the end he balks and he steps back, right? And maybe, again, it's my own view. I think China will read that the only way to play Trump is take him on, match his aggression. And you could actually perhaps use the comparison of the negotiations on the Russia-Ukraine war, right? I mean, it's pretty extraordinary that Trump has, forced Ukraine, the weaker partner, into concessions. There's this minerals deal. It smells a bit like Trump. He tries to identify weaker partners and then exploit them. I mean, there's no other way to describe it in terms of the mineral deal. And yet, Russia, Putin, a stronger opponent, perhaps he's a bit nervous about taking them on. So I think that would be the read of the Chinese. We don't want to be the Ukraine in the Russia-Ukraine peace negotiations. If we show any weakness, Trump will exploit that, and we can never get that back. I mean, this often talking conflict about escalation dominance. I mean, China wants to maintain, it needs to keep up its defenses and not show any vulnerability, because I think if they do that, if they show vulnerability, Trump will exploit that. So I think there will be tough in negotiations, and they will try and exploit the fact that Trump did blink first, or that would be their view, I guess.
Do you think Trump has succeeded maybe in isolating China from the rest of the world, or just, like you say, maybe just blinked first and maybe given off a slightly weak signal?
I don't think so. I mean, it's quite, you can't ignore, or you can't separate what's going on from the broader perspective in terms of, Trump has annoyed his allies across the board, whether it's Denmark over Greenland, whether it's the European security guarantee that has been pulled away, Trump's position in Ukraine-Russia negotiations. I mean, Europe, I think, will be trying to sit on the sidelines and hope that China actually brings the Trump administration down a peg or two. Now, the Trump administration thinks that it can force Europe to align behind it in terms of tariffs, etc., on China. I think Europe will play hard to get, and maybe it will try and get commitment from the Trump administration in terms of those very security guarantees. Look, the number one national security priority for the US is clearly China, right? The number one security priority for Europe is Russia. So the Europeans may say to Trump, sure, we will align with you on tariffs with respect to China, but what are we getting? You need to give us some assurance that actually you have got our backs in this battle with Russia, and that you're actually going to negotiate tougher than you have been doing so far in this Russia-Ukraine peace negotiation story. So I think this gives Europe a bit of leverage. We know what Trump wants. He needs allies to help counter what the US administration sees as the China threat. Europe has its own interests now, and that's obviously its own security, right? So let's see how this plays out. But I don't think the Americans now can be as assured that Europe will stand behind them in this battle with China.
So very interestingly, you just mentioned that Europe could use this China-America trade war to its advantage to secure potentially security backings in Ukraine. Is that something that Trump would be willing to accept, to sort of, I'll give you backings if you essentially support me a little bit more and come to a trade deal with America while we go to trade war with China?
Well, I mean, it's really easy for the Americans to do, right? I mean, they have been the guarantor of European security since the Second World War, so it's not as though they're giving something new, right? It's just assuring something that in Europe we all thought was there already. Now, I guess the problem for Europe, in a way, is, do we believe anything the Americans say now anyway? So what's the value of those security guarantees from the US, really, when I guess they've been exposed in their actions in the last 3 months or so, in terms of, they don't really care very much about Europe. They don't really care very much about Ukraine as it sits on the map. I mean, for the Americans, it's all about this big battle with China. I mean, you could argue that, the fact that Trump has gone soft on Putin is because he wants an alliance with Russia against China, right? And so the concession is Ukraine. We'll see. I mean, there are a lot of moving parts now, but I don't think Europe wants a trade war with China. We don't want to go down that route, actually, but the Americans do, right? So America wants something, Europe doesn't want the same things. Can Europe be a clever negotiator in all this, right? I mean, we'll see, right? It's incredibly interesting, but actually, it's interesting, but it's really important, right? It's important for all of us. How this pans out will impact on global growth, global inflation, living standards, poverty levels. It's critically important that, and one of the problems, I think, in terms of the negotiations between the Chinese and the Americans. I think people compare this situation with the global financial crisis of '08, right? I mean, thinking about that, I mean, in a way, we had joined up global economic coordination in response to the crisis, right? We had the creation of G20, the Chinese, the Americans are working together to pump liquidity in the global system. It was kind of a win-win in terms of working together to address that problem, right? Unfortunately, I think these negotiations, it's a bit of a zero-sum game. Winner takes all. It's China versus the US. And that makes it difficult, right? I mean, if in the end, the US ultimately wants to damage China economically because it thinks that it's going to be fighting a war against China in the future, what is the deal, right? What is the deal here? And again, the Chinese probably will think that they need to play very hardball around this.
Yeah, I mean, China is responsible for producing or involved in producing 90% of the world's rare earth minerals and resources, or however you exactly hear that. Do you think Ukraine might have a bit of a card to play here, a slightly stronger hand in this minerals deal? Now that China, they've already on April 4th, on Friday, said or put in place trade restrictions on rare earth elements. Presumably these will be getting stronger as this trade war deepens. But is there a role here for Ukraine and Europe rather, to sort of play that card?
Well, I'm a bit sceptical, to be honest. I mean, I've covered Ukraine for over 30 years as an economist, right? And I'd never really heard of Ukraine's rare earth treasures. It kind of was brought up, I think, by the Ukrainians as a negotiating ploy. I mean, it will take a lot of money to get those minerals out of the earth. It depends on security guarantees, assurances that the Americans have not been willing to provide. It needs a good business environment to bring investment, right? And they've all been kind of lacking in recent years in Ukraine. So, and actually, again, this bromance between Putin and Trump, maybe because the Americans think that Russia is the solution in terms of its rare earth deficiency and the reliance on China. So it's complicated. Basically, is the response to your question. I think it does underline the vulnerabilities though of the US. I mean, when two economies are so interrelated, it's not just about merchandise trade. It's about capital accounts, and the way the China does invest in US treasuries, right? So if China's not happy, it can pull those assets out of the US and destabilize US markets, right? How do you decouple two economies that are so intertwined? And can you do that without disrupting global trade, the global economy? I think that's the difficulty here. The Americans want to decouple, but it's going to be really difficult, right? And likely very disruptive to the US economy and the global economy.
Linking on from that, America has cut back its aid programs and obviously imposed global tariffs, which has presumably damaged their US interests in Africa quite heavily in an area which, to my understanding, China was already leading quite substantially. Do you think this is a bit of a blind spot for Trump? And if it is, how meaningful a blind spot is it?
Well, as I mentioned earlier, I mean, the US has gone around the world in the first 100 days annoying everyone. I mean, annoying allies in Europe over security guarantees, cutting the USAID budget, particularly in Africa. It doesn't really have many friends at the moment, right? And I quietly suspect that a lot of the rest of the world is secretly hoping that the Chinese kind of, again, bring the Americans down a peg or two, right? So it's pretty remarkable if you think about it that many European countries are probably hoping that China wins through on this one, which is a remarkable thing, really. It's a remarkable turnaround in global allegiances. To imagine you have this situation where the US is getting close to Russia or closer to Russia because it doesn't like China, moving away from Europe, which makes Europe think, actually, do we want a better relationship with China? rather than the Americans. I mean, it's pretty extraordinary, and it's a reflection of the fact that the Trump administration has really thrown all the national security and global economy cards on the ground. Everything's up for grabs almost, which is, again, pretty extraordinary turnaround events, which probably is reflected in markets. It's created a huge amount of uncertainty. How is this going to end? I mean, we saw the about turn from Trump in terms of policy. You saw a huge rally in terms of US stock markets yesterday. Today, they're a bit more nervous, right? They're back to thinking, what are the long-term consequences of this? And I think generally the conclusion is deglobalization, rise of trade autarky does mean lower growth and higher inflation, and that's probably reflected in markets.
So outside of a sort of the direct trade between US and China, what are some other economic battlegrounds, if you will, that you see emerging?
I mean, some of the consequences are quite interesting in terms of the trade wars. Again, trade wars, if you think things through, trade wars mean lower global growth. It impacts on some specific markets. It means lower oil and commodity prices. We've seen that come through this week, right? And there are winners and losers there. Losers are the oil and commodity exporters, Gulf states, Central Asia, Russia, interestingly. There was, I think, Saudi Arabia. I mean, the price at which it budget balances is about $90 a barrel. So, if oil is going below $60 a barrel, it implies a huge budget deficit in Saudi Arabia. And remember that MBS had promised huge investments, I think $700 billion worth of investment in Trump's America. If Saudi Arabia is facing a huge budget deficit, it may not be that willing to invest those funds in the US. So, look, there are lots of moving parts in what's going on, interdependencies, interrelations, knock-on effects from tariffs to other things. And you can see that in these other markets like oil and commodities. Winners will be countries that import energy. A lot of Asia, including China, India, emerging Europe, and Europe in particular, the energy importer. So, while in general, I think trade wars lead to lower growth and higher inflation, the fact that oil and commodity prices will probably moderate will benefit some countries and provide an insulating kind of factor for those countries.
So, what do the events of the last week mean in terms of the US being the global reserve currency?
Well, I think it's been questioned, would be my answer. It's kind of been questioned by the Americans anyway, because they've pushed this line that, it's the Americans, US exceptionalism, and a cornerstone of that has been providing the dollar as a reserve currency for international trade. It's not been cost-free for the US, and actually allies and countries that trade in US dollar should pay for it. So either, and it's a bit like the US security guarantee for Europe. So hence, allies and countries that trade in the dollar should provide preferential tariffs for the US, or they should make sure they buy US military equipment or sign up to big orders from US contractors, right? So they suggested there's a price for this. I think those allies and countries that trade in the dollar would argue that actually there's been benefit to the Americans from this reserve currency status, right? I mean, because the dollar is such a dominant currency, the US gets to set the rules internationally. It dominates multilateral agencies like the World Bank, the IMF. It set the agenda in terms of global trade negotiations. Countries, it's able to impose sanctions on countries, which deliver on its geopolitical and security agenda. I mean, that's because the dollar is the dominant global currency. So they'd argue, well, we don't really have to pay for it because you're getting benefits anyway. Because now the Americans are demanding payment for that reserve currency status, other countries may say, well, we may look at alternatives. right? We don't like being pushed around. We maybe don't share the same interests and values as you. And so we may see capital being pulled out of the dollar. In fact, the dollar, which is normally a safe haven play, has been weakening in response to the trade wars. So, and again, the focus on China perhaps pulling some of its capital out of US treasuries. Maybe the US is no longer seen as a reliable partner. Maybe foreign countries look at the US and don't like what they're seeing in terms of economic policy. Is there the same confidence and credibility in policy making in the US, which has been an underpinning of the dollar as a reserve currency and as US treasuries as a risk-free global benchmark, right? If you don't trust and believe in the economic policy mix from the Americans, maybe you don't want to trust in the dollar as a reserve currency. So I mean that's almost revolutionary, to be honest, in terms of thinking around the dollar and the US position in the world. And I guess Trump, through his actions, have made people question that, right? So it's kind of interesting.
Two final questions. Firstly, what would be the alternative to the dollar? I suppose is the big one. And also, you've mentioned it a couple of times, but do you think a Chinese sell-off of US government bonds could have been the instigator for the bond yields rising and Trump's subsequent U-turn on tariffs?
Well, I think what we may see in response to the challenges to dollar as a reserve currency is just diversification. Countries moving into euro, sterling, Aussie dollar, NOK, I mean Swiss franc. I mean, just putting money in more places. Was it the Chinese? I mean, it was maybe one of the factors, but I think there were numerous other factors, right? Again, this idea of credibility about US policy, concerns about inflation, and possibly China acting in a retaliatory way, perhaps.
Timesh, thank you for joining me today.
My pleasure. Good to speak to you.